All right, welcome to Sterling Stock Picker Weekly Calls. I am Jaden Sterling, your host and founder of our software platform. Today is Monday, March 18th. Let's dive in. We've got a lot to cover today. So let me share my screen. And what you're looking at is the homepage. And the guys have done a great job in adding this new feature, which is, we're calling it interesting stocks. But there's so much more than just interesting stocks. These are companies that are a daily winner or a 30-day best. Or in our stock rockets, look at that. Today on this list of 8 companies, 2 are in our stock rockets. Now, for those of you who are new to our platform, welcome. We're thrilled to have you here. And we host a service. We started a service called Stock Rockets. This is the part of the software where I found the most winning stocks is right here. And we have very strict criteria. The company has to have a 50% or greater quarterly revenue growth, that is YOY or year over year. They must have a 5-star North Star ranking, and they have to be an industry top performer. So they have to be performing at the highest level in their respective industries. If you were on my last Monday call, communication services is a huge industry that is crushing it. You gotta have part of your portfolio in this sector, communication services. Now, how do you find that? Well, easy, super easy. All you do is go to winning stocks and industry best, and you will see here an industry. Once you scroll down, communication equipment can be certainly one of them. Yeah, let's look at communication equipment. So if you click on that, it then brings up a list of the top performing companies within that industry or sector. So check it out. You want to be looking at the 5-star stocks. You'll recognize a lot of these names: Hewlett Packard, Zebra Technologies, you're probably familiar with, Motorola. So just companies that are, out there performing really well. I wanted to bring that to your attention. Okay, the topic for today is the Fed giving us a head fake, meaning are they going to pull back on their guidance, which started late last year, of potential rate cuts this year? I think they might be, unfortunately. I think they might be totally telling us one story and building an argument for a completely different tactic this year instead of cutting rates. Frankly, I wouldn't be surprised if rates actually go up this year toward the end of the year. I really don't know about a Federal Reserve rate cut. And this is why. I'll show you. This is what I'm thinking. You tell me what you think. I'll show you. Here's the U.S. Bureau of Labor Statistics. And this is, when the CPI, Consumer Price Index, is calculated, it excludes food and energy. And what has been one of the biggest contributors to inflation for everyone in the world is food, definitely. Energy prices as well have gone up. But so the Fed excludes those in the CPI number, which that is the basis for determining if the rates are going to increase or drop or stay the same. Oh, there's our doggo Jet. So the increase for on a 12-month percentage change for CPI, the latest numbers up 3.8%. The Fed has been clear that they're looking for the target rate is 2% increase. They feel like if they get 2%, then that's a number where the economy can stabilize and interest rates won't have to rise. So, we're far off from that number. We're at 3.8%. We're almost double the number that they're looking for. And I really don't see this working out the way most people think it's going to. Here's another interesting fun fact. Tyson Foods is laying off Tyson Foods to close the Iowa pork plant with 1,200 workers. So not only are they laying off workers, but they're literally closing plants. Permanently closed, over 1,200 jobs affected. So there's going to be a lot of closures happening this year. And so what are they doing? In return, they are hiring immigrants. They are set to hire over 40,000. This is from the New York Post a day ago. 40,000 immigrants, paying about $18.50 an hour. And literally, those living in these areas where these food plants exist, there is a shift happening where the plant is being closed, or workers are losing their jobs. And so what is the direction? Tyson Food new direction. That's interesting. They got a new logo. Tyson outlines plans for future, unveils new logo. That was last year. They are... Top meat and dairy companies are emitting more, not less pollution. Okay, so we'll get back to this. This is going to be an interesting event that unfolds here. Going to affect a lot of people, a lot of communities. And here's another story from 2 days ago. Family Dollar. Did you all see this? Family Dollar stores are closing. And they're closing 1,000 stores, 600 of which will be closed in 2024. This does not affect the Canadian operations. It's all U.S., so 1,000 U.S. stores closing over the next 5 years. And how is that going to affect people? Well, there's a lot of affordable food sold through Dollar Tree stores. And now with the closure of these stores, I believe what's going to happen is it's going to drive food prices up even more. Like, there's no end to the increase in food prices. So I think we need to look at what is really going on in the economy. And last year, at the end of last year, it became very bullish. The sentiment in the economy, in the equity markets, was very bullish, because when you go from a Fed increasing interest rates to forecasting a decrease in interest rates, well, that stimulates the economy. It puts more money back into the economy. It makes it easier for the average consumer and investor to live, right? Because expenses come down, mortgage interest rates come down, consumer debt interest rates come down. And there is, this continued into January, an up market, January, February, and as well as into March now. We're March 18th. And if it becomes an issue where at some point the Fed says, oh, inflation is just continues to be way too hot, the numbers are way too high, we're going to have to we're going to have to forget about a decrease in rates. We're going to keep rates the same and or increase them in order to settle this inflation down. I'll bet that's the direction the Fed's going to go. What that means for you is, as an investor, what have we seen recently? We've seen gold hit a brand new high. We've seen silver increase 3, 4, 5% over the last few weeks. 3% was in like one day, so it's up about 5% in the last couple weeks. Bitcoin, cryptocurrencies have performed really, really well. Now, gold and silver are hard assets. That means it's hard to mine them. And that's typically what people flock to in an uncertain investment environment. So, super important to have a combination of these assets for yourself. I prefer the coins, gold and silver coins, the physical part of gold and silver, and they can also be transacted in business and commerce. Crypto, you want to stay with the top ones. That's critical, right? Bitcoin, Ethereum. Really look at the big ones that are the most popular and the most widely traded. And in terms of equities, look at some that are going to give you a bit of a defensive posture. I mean, they're going to go up if the market goes down. That's companies like QID. It fluctuates 2 times in the opposite direction of the market. So if the NASDAQ goes down, this will go up by a factor of 2. So at least it gives you some type of support in your portfolio in the event that the Fed reverses course this year and the equity market starts to drop. So I hope this was helpful for you. Thanks again for your support. Thanks for tuning in. We've got an amazing group of folks here. We value you and we're grateful for you. And I'll see you next Monday. Bye for now.